For this mock exercise, we're asked to prepare financial statements for a company called Batra Corporation. Let's take a look at the question. This question gave us a trial balance or a list of balances at the end of July 31st, 2009. And we're asked to prepare 3 financial statements. One is called statement of earnings, i.e. income statement. The second is statement of retained earnings, and the statement of financial position or the balance sheet for the year ended. So let's start by looking through the set of accounts that's given to us, and let's identify which of these accounts are income statement related accounts. Okay? So let's start with the income statement first. So first of all, let's start with the heading. It's called Batra Corporation. The heading of the income statement. The name of the statement is called Statement of Earnings. Or if you like, income statement. And this is for the year ended, because this is a period of time statement. July 31st, 2009. First, we start with revenue. There's only 2 revenue accounts I can see from the list. One of them is commission revenue. The second one is rent revenue. Total revenue. Now, let's look at the expenses. The first set of expenses I see here is salaries expense, and that was the first line item in the question. Followed by rent expense. Then we've got utilities. Interest expense. Okay, so notice in this question there are 2 supplies, right? There's supplies expense and there's supplies. And presumably this supply is inventory. So that's an asset. Okay, again, it's important to the wording is important here because you need to know which of these supplies are either a balance sheet item or an income statement item. So this one is supplies expense. And depreciation expense. Total expense is $54,000. Then we need a subtotal called earnings before taxes. So that is revenue minus expenses. And then we have a separate category called income tax expense. Gives me net earnings. Now this is an example of what I call a single step income statement. A single step because it only has two subtotals before you get to net income before taxes. So income tax is always a separate line. It is part of expenses, but it's always after you calculate revenue less expenses. And this is called a single step. And we're going to learn in other videos another style of income statement called the multiple steps. And you'll see the word multiple means there's multiple subtotals. Okay? Now we're ready to do the statement of retained earnings. I'll do it on the next page. So again, the name of the company, Batra. This is statement of retained earnings. And again, the period is for the year ended. (2009). Okay? Now, we always start with retained earnings beginning. And that one, we're given that number, right? The retained earnings at the beginning of the year is $17,940. We're going to add the net earnings that came from our statement of earnings statement of $30,600 less dividends. In other videos, we're going to see the different types of dividends, but we're going to categorize only one at this point. Call it dividends. And that one is given to us for $12,000 to give us $36,540. This is the retained earnings, July 31st. You can see why it's a period in time statement because it captures the activity for a period of time. Once we're done with that, we're ready to prepare a balance sheet. I'll do that next page. And it's always prepared in that order. Statement of earnings first, then statement of retained earnings next, and then the balance sheet, and then of course the fourth statement is statement of cash flow, which we're not going to do yet, which will be covered in other videos. So in this case, let's do the heading again, Batra Corporation. And this statement's called the balance sheet. And remember, a balance sheet is a point-in-time statement. So this is as at July 31st. Okay? Starting with assets. Now, this format of assets called a classified balance sheet. And it's classified balance sheet because we're going to classify the assets and liabilities based on adequacy, based on availability, and we're going to list them in order of liquidity for assets and maturity for liabilities. Okay? So we're going to start with current assets. So current assets are listed in order of liquidity. In this case, we're going to start with cash. Followed by short-term investment. Okay. Then what's the next most liquid asset is accounts receivable. Then supplies inventory, right? That gives us a total current asset of 53,660. Then we're going to list all long-term asset. And the only item there is property, plant, and equipment. It's long-term because the usefulness of it spans over more than 1 year. Okay, greater than 1 year. And here we've got only one asset called equipment. And the equipment has a contra account called accumulative depreciation. And that is a contra, and this account captures how much of this equipment, which is a long-term asset, how much of its usefulness has the company consumed to help generate revenue. And that gives us 19,900. So altogether, the total asset is 73,560. We know from the equation, accounting equation, A equals L plus SE, we know the total liability shareholders' equity should equal to 73,560. Next, we've got liabilities and shareholders' equity. Now, other statements that you see in public companies, they're either side-by-side state, which means that the assets are here and the liability shareholders are on the other side. Right? So sometimes the way the balance sheet is presented could be a side-by-side. In this case, it's not, so it doesn't matter. It's just a preference. And liabilities, again, we're going to segregate liabilities between current and long-term. And we're going to list the current in order of maturity. So current liabilities, accounts payable is the first one. So which one is due first? I guess is the other way of putting it. Interest payable, and notes payable. Now, the notes payable, we're told that this is due 2009, which means that it's due less than 1 year. So that's why it's part of current liabilities. Now, there is no long-term liability in this question. Okay, so that's all we have there. Next is shareholders' equity. First thing we list are the amount invested by owners. It's called common shares. Followed by retained earnings. And the sum of these two should equal the 73,560. Thank you.